The Schwab US Dividend Equity ETF, known as ticker symbol SCHD, is easily one of the most popular dividend growth ETF choices across the entire spectrum of ETFs for dividend growth investors. And for me personally, I'm definitely included in that list. Because as you see right here across my 7-figure portfolio, I currently own 595 shares of the Schwab US Dividend Equity ETF, and I'm planning to keep buying SCHD throughout the next year until I hopefully hit close to 1,000 shares or more. But in this video, we're going to dig a little bit deeper into this ETF and actually stress test it, go over all this ETF has to offer, and even dig into some important metrics and insights that you're not going to find anywhere else on YouTube. So whether you hold a single share of SCHD or plan to follow my path and own hundreds or thousands of shares, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Just to get us all up to speed, let's go over what this ETF is, some of the basics, how this ETF works, and even the methodology that it tracks, meaning even dig into the Dow Jones US Dividend 100 Index. First of all, just to go over some of the basics for those of you that might not be aware, this ETF tracks as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now looking into SCHD's fact sheet, just some of the highlights let's go over. It says a straightforward low-cost fund offering potential tax efficiency, which is great. The fund can serve as part of the core or complement in a diversified portfolio, makes sense. Tracks an index focused on quality and sustainability of dividends, which I said the underlying index is impressive, and it has a rigorous set of screenings for stocks to enter and exit, which is very important, especially if you're like myself and you want to sleep well at night. Now, some other main things about SCHD, it currently has 52 billion plus in total net assets, which is massive. The expense ratio is 0.06%, which is very cheap, and especially if you're like myself that now owns hundreds of shares of SCHD, you don't want an expense ratio that's too high. So now that we're all on the same page, we understand how this ETF works, the ins and outs of the index that it tracks. The next thing that we have to dig into is the performance of the ETF, the holdings, etc., etc. So first of all, as far as performance, it doesn't take a genius to see that over time, at least over the past 13 or so years, this ETF has consistently moved up in price, which is what makes it so appealing to me as a long-term investor. Because even though as a dividend growth investor, I'm obviously very focused on income through dividends and even dividend growth, over time, over the years, I also want my overall portfolio to move up in price to, of course, increase my net worth long-term. And over the past 13-14 years, SCHD has over tripled in price, which is pretty impressive. Now, the next thing to dig into is the holding breakdowns and, of course, the top holdings within SCHD as of right now. Now, as of right now, the top sectors are things like financials, healthcare, consumer defensive, industrials, and energy. Now, there are going to be times within the market that some of these top sectors are probably going to flourish more than others, and over the past few years, some of the top holdings within SCHD's breakdown have struggled a little bit, which is why the ETF has lagged the overall market. But I happen to think for long-term investors, because of the methodology that SCHD and the Dow Jones US Dividend 100 Index tracks, I think these sectors are tried and true, and I believe in SCHD's model. Now, the top holdings are things like Chevron, Texas Instrument. We have things like Lockheed Martin, Cisco, UPS, PepsiCo, Verizon, Coca-Cola, Pfizer, Amgen, etc., etc. Now, I hear you, some of these top names are probably not your favorite single stocks, but again, if you trust the process and trust that SCHD is going to continue to have high quality names within the holdings over time that not only pay dividends but also raise dividends consistently, then you, my friend, just have to basically hold on for the ride. So now that we looked at price performance and some of the holdings, I think it's time to talk about the dividend that SCHD has offered historically and even offers today. So the current trailing 12-month dividend yield is just shy of 3.5%. Now, this is one of the main reasons on why this ETF is so appealing to me compared to things like VU, DGRO, or names of those sorts. Now, this is because as a dividend growth investor, I of course want growth, but I want dividends, and I want dividends today. Some investors are more focused on growth, and some investors are more focused on income. I would consider myself somewhere in the middle, maybe even a little bit more on the income side. So for that reason, SCHD's 3.5% more or less starting yield is offering a lot of cash flow from day one, which definitely satisfies my urge to get money into the portfolio ASAP. Now, SCHD's dividend growth rate, this is another very important metric for long-term holders, and one of the main selling points for this ETF altogether. Now, as you can see over time, the dividends have been getting bigger and bigger, more or less, quarter after quarter, year after year. So much so to the point to where, as of the most recent December dividend, it was 74 cents, which is considerably higher than the previous year at 70 cents. Now, who exactly knows how high the dividends are going to go in the future, but if history were to repeat itself, we're going to see 5 to 10 to maybe 12% increase in dividends year over year, which is absolutely phenomenal, especially as you get into the hundreds or thousands of shares of SCHD long term. Now, this is because as inflation is running rampant and as things are getting more expensive across the board, who doesn't want their dividend income to increase over time? I definitely do. Now, just to give you a quick example, back around this time 10 years ago, SCHD paid around 23 or 25 cents per share per quarter. Now, around 10 years later, almost 75 cents per share per quarter. So let's just round it up, let's say about 3 times as much cash flow just over the last 10 years. Now, I'm currently a 31-year-old dividend growth investor that's hopefully going to be investing for several decades from now. So my initial thought process and why I grabbed so many shares of this ETF is that if I can stack up as many shares of this ETF today or tomorrow, then 1 year from now, 5 years from now, 10 years from now, 20 years from now, I will be getting not only so much cash flow, but so much cash flow doubled or triple whatever it is today. And especially being a dividend growth investor like myself that doesn't necessarily have a massive amount of cash to invest into the market every single day. Consistently buying into a dividend growth ETF like SCHD that not only pays dividends quarterly, but again, consistently has paid more and more in dividends quarterly, meaning that your money is basically going to work harder and harder for you, creating a compounding effect for your overall portfolio. At least that's the idea here. So now that we went over all of that, there's only one last thing to do within this stress test, and that's to compare SCHD's performance next to the benchmark SPY or the S&P 500. So if an investor was to have invested $10,000, and this was back in 2011 when SCHD started, that $10,000 with dividends reinvested would have turned into $43,800 if you would have invested into SCHD. Now, if that investor invested that same $10,000 on that same exact day into SPY, they would have turned that 10K into 51.3 thousand or 14.02% average total return annually compared to SCHD's 12.57. So although SCHD does have a total return so far, if dividends were reinvested, of 338.16%, which I don't think any of us would be complaining about. If an investor would have at that same time bought SPY, they would have been up more considerably. Now, I think it goes without saying that if you or I returned 12.5% or 14%, either way, that's a very successful investment long term. And you have to give SCHD some brownie points because over time, the dividends that were paid were bigger than that you would have got of SPY. But even all the amazing aspects that SCHD does offer to investors like myself, investors would have been much better off just buying SPY and holding on through the long term. Now, even though that's the case, that does not deter me for a second from buying another share of SCHD every single day throughout this next year. And this is once again because SCHD aligns with my goals of having a dividend growth ETF that pays a substantial dividend from day one. But it goes without saying that there's tons of other high quality dividend growth ETFs across the market, like SPY, like VU, like DGRO, just to name a few. But in the talks of SCHD, the Schwab US Dividend Growth ETF, I want to now hear from you guys down below. If you currently own any shares of SCHD, how many shares do you have as of right now, and what is your long-term goal as far as this holding goes? If you enjoyed this video, make sure to please drop a like down below, subscribe for more future content like this, and make sure to go down below and grab my dividend tracker and ebook. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.